Immediately I can see, okay, we have this, which is open close. Why not this one? Because this is not a refinement. See, the daily starts here. Why would I not refine the daily? I want to go daily or higher. So this would be a refinement, this would be a refinement, and so would this.
All right, folks, here we are on Trading Up. We've got Avi's World in the house now. We've just done an awesome podcast. Go and check it out. There is a link under this video. But what he's going to do today is break down one of the trades he took. And you're actually going to see a screenshot of the trade that he took. Then he's going to show you how he got to that trade. It's Malaysian SnR. I can't wait to see it. So welcome back to the show.
Thank you so much for having me on. It's a pleasure.
All right, folks, here we are on the Blue Guardian dashboard. This is my account. We've got a loss and a win this week. I'll show you why. It wasn't the cleanest of weeks at all. Let's dive in and have a look. So you can see here, this is the first trade. I actually took it the week before, right at the end of the day. What was I thinking? Or the end of the week, it gapped up the next week and it took me out way past my 1R stop loss. So I actually took more than 1R loss on that. That was a real shame. Then nothing more for the rest of the week until I missed a position, had to enter it manually, guess the lot size and got it wrong to the point where I had to suffer through all this drawdown. Thankfully, it didn't hit my stop loss because it probably would have blown the account. The Guardian Protector would have been great at that point. I didn't have it running. I got out of the majority of position at break even and then I took my actual trade here, which got me out at just about 1R. So that was it for the week, just 2 trades. I'm bringing more pairs in this week, so hopefully more trades, and let's see this account get up there back into the blue. All right, guys, if you do want to grab your own Blue Guardian Challenge, click the link and the coupon below the video, all one word, Trading Nut, and you'll get yourself 10% off at checkout.
All right, so we're going to start off by analyzing this chart or analyzing this trade that I took. How exactly did I take this? Now, before I start, I want you guys to know that there are going to be terminologies that I may say in this breakdown, which you may not be familiar with because you haven't watched all of my videos. But these are super basic terms that you will come across whenever you're trading Malaysian SnR. You have the storyline, you have the setup, you have the entry. You may be wondering, how do you mark out a support and resistance? All of that's covered on my YouTube channel. So if you want to go and check that out, you can. But that's going to take more than the allocated time. So we're just going to get straight into exactly how I took this trade. So the trade is marked right here so I don't miss it. First step, as I've marked out over here, we have a very systematic approach to every single trade that we're taking. You need to know the storyline. The storyline is basically the movement of price from one support or resistance to another support and resistance. Okay, so it's sort of like an order flow. Let's not confuse ourselves. Let's get back into SnR. It's the movement of price from one point to another point, and it also describes what time frame. So storyline is not just the movement of price from one point to another. Storyline also describes to you and tells you which time frames are going to be significant to propel price and which time frames are going to be significant to be an obstacle to price reaching its end destination. Correct? So if we have points A and B, we have A, we have B, price moves from here to here, correct? There are going to be obstacles that may not allow price to reach its final destination, but rather reverse. What are those time frames going to be? Storyline talks about those. And there are also going to be certain time frames that price is going to reject off of and move very nicely from. What are those time frames going to be? So storyline details all of those things. Now, storyline is the easiest part of Malaysian SnR to actually analyze. So I urge everybody to not get blindsided by a time frame and analyze every single higher time frame. There are only 3 higher time frames. You have the monthly, the weekly, the daily. Analyze all of them for the storyline. It takes less than 15 seconds or 20 seconds, maybe 30 seconds if you're new, to analyze the storyline of each higher time frame, right? I'm not going to go into depth about storyline in this video. As I said, we don't have time. So just want to put that out there. What did I notice for me to take this trade? Why did I take this trade, guys? Back to this chart right here. First reason, storyline. We have a weekly bearish storyline. At the moment, right here, we have a weekly reject weekly with this candle. So to constitute a storyline, we need the candlestick to reject, and then we need the candlestick to close. There is no rejection without a closure, because you will never know if the price is rejecting or has it rejected. So if price is in the process of rejecting, we don't care about that. But if it's closed, leaving behind a wick, and the body of the candle is below, in this case, this is a resistance, the body of the candle is below the resistance, that is a successful rejection. Now, does that mean that 100% of the time price is going to move in that direction? No, of course. If you have any more than 2 brain cells, you would understand the markets are, or rather the markets have an element of randomness to it. Okay, so it's never 100%. Let's move on. We have a weekly, reject weekly, and then the daily time frame breaks out right here. So this is where we had the weekly reject weekly. This is the last daily support before it got broken. This is the final daily support. If there was a daily support over here, that was a traditional SNR. So again, here are some more terminologies. You have traditional SNR, and then you have open close. They are not the same because I don't use open closes. See, this is also an SNR. So is this, and is that, and is that. But I don't use open closes to validate a breakout for the storyline, right? I only use traditional supports and resistance. That's a traditional one. That's a traditional support. That's a traditional support. That's a traditional resistance, and one there, and another there. Okay, so we have ourselves the daily breakout, and that thus confirms the weekly bearish storyline. So that means two things. That means that I'm going to be looking for entries from the daily resistance, and that means that I'm going to be watching out for daily support to act as an obstacle. So remember what I talked to you guys about. The storyline doesn't just give you a point-to-point description. The storyline also gives you, on top of that, which timeframes are going to act as obstacles and which timeframes are going to act as the best timeframes to look for entries from. So if I'm having a weekly bearish storyline, like I said, we had a weekly bearish storyline, the timeframes that are going to act as obstacles will almost always be the weekly and the daily timeframes. Okay, why do I say the weekly and the daily timeframes? Because if we're moving from a weekly resistance to a weekly support, that means that the weekly support is going to be our potential final destination. We will never know, right? We're not the big movers, but we will never know this. But if we have a weekly bearish storyline, price is moving from a weekly resistance to a weekly support, the weekly support is going to be potentially our final destination. The daily acts as an intermediary obstacle. Price could do some very brash moves from there. Or price could, if you're unlucky, completely reverse even from the daily. So notice, when we're dealing with a time frame storyline, so in this case, we're dealing with the weekly storyline. When it comes to obstacles, we are only dealing with two time frames. We're dealing with the weekly in itself. Why? Because that could potentially be the end of the storyline, right? So if you have a weekly bearish, the weekly support could potentially be the final destination. So that acts as an obstacle, correct? An area you should be concerned about, an area you should pay attention to. But why the daily? Because the daily acts as that intermediary sort of price could do some stupid moves from there, some weird brash moves from there. Okay, so on the flip side, which timeframes will we look to enter from? The same timeframes that we're looking at as obstacles. So when we have a weekly bearish storyline, we're looking at daily resistances. So we're selling from weekly resistance, right? We're going to look at daily resistances to sell from or weekly resistances to sell from. Of course, if you could have both of them together in roughly the same price level, that would be the best. Sure, they call that multi-time frame, okay? Or they call that key level, when you have multiple time frames or multiple higher time frames in the same area. So in this case, what happened? We just had ourselves a daily. So this is a daily support, sell, buy. We have a daily support that gets broken by this bearish candle right here. So we can go ahead and mark that out with a little rectangle just so we can see pink. So there's a little bit of contrast. That would be our resistance. Now, why is it a resistance? Because it was a support at once and then it got broken and now price comes back. Okay, so what did I tell you guys? We have a weekly bearish storyline. Price is moving from this weekly right here and potentially, we don't know, but potentially could be coming into this support because this is on a weekly too. See, this is the time when we use an open close. Okay, when we are dealing with potential ends of storyline. So we're coming from this resistance to this support. Okay, let's go back to the daily. So when it comes to an entry for a weekly bearish storyline, we will pay attention to the daily resistances, or even better, if we have a weekly resistance also in that same area, that's even better. It doesn't have to be there, but it's even better. It adds more confluence, correct? So here we have a daily bearish. Now, all we need from here, we have the storyline aspect already done. Okay, next thing we need is going to be the setup. So the setup, you can have one of two setups. You have a setup where you have the daily reject daily, and then a H4 just gives you a new resistance. It doesn't do a breakout or anything like that. It just gives you a new resistance. That is more of a medium to high risk opportunity to sell from. The other, well, there's three main ways. That's the first setup. The second setup is where you're waiting for a whole storyline to start on the daily this time. So instead of just taking a touch trade, you know, where price comes in here, you set a limit. Instead of doing something like that, you wait for a daily reject daily. So what's that mean? A wick comes, the price comes in, touches the resistance, leaves a wick behind, and closes as a rejection. Remember, the closure is super important. It is imperative to validate the storyline, okay? And then after that, you observe for whether the H4 has done a bearish breakout. It's the same principle as how you apply the weekly storyline. You're just applying it fractally on the daily. And then you would then say, okay, we have a daily bearish storyline. I can take an entry from the daily. I can take an entry from the H4, okay? The way I entered this trade, however, was a little bit more, you could say, a little bit more risky, but it really wasn't that risky to me. It was just a medium risk trade because we never had any positive outcome from price rejecting off of the support. Because if price rejected off of the support on the daily and I was like, oh my gosh, I'm not liking what I'm seeing, price could just propel itself upwards completely, then that would not be very nice. You know, I would not be taking a touch trade like I did. I would not be taking these risks like I took over here. So all I did was very simple. I saw that, okay, we are in a weekly bearish. What is the setup that we have? When we're in a weekly bearish, we should be looking for sells from the daily, or even better from the weekly, but primarily from the daily, correct? That's what I said, right? Weekly bearish storyline, weekly resistance, or weekly bearish storyline, daily resistances will be our point of interest to sell from. So I know we have 3 daily resistances. We have ourselves a support, which got broken and becomes a resistance. That's the first one. The second one is this open close, which was an open close for support, right? Buy in between, that's a support, but the support gets broken by this bearish candle. So that becomes sort of like a left shoulder, if you will, for the future. And then we have a traditional, super easy to spot resistance, right? Just simply a buy, sell. Just an easy resistance right there on the daily. So we have these 3 zones. All I did was wait for price to come into one of them, and I looked at a lower time frame breakout, and that's it. I'm going to place my entry, right? You don't have to look for a lower time frame breakout. You could use things like trend line confluences, inner circle trader, kill zones for your timing. All of those are confluences. What I did was when price came inside here, all I did was refine this daily. You're not taking an entry off of the daily. You're looking at the daily as an entry point, and then you're going to refine it to the H4, right? And then you're going to go and find, okay, what is in there? What is in that daily that I could, take a look at, right? So for me, immediately, let me just get rid of this red. Immediately, I can see, okay, we have this, which is open close. Why not this one? Because this is not a refinement. See, the daily starts here. Why would I not refine the daily? I want to go daily or higher, right? So this would be a refinement. This would be a refinement, and so would this. Okay, price doesn't go up and reach there, of course, but these would be the areas that I would pay attention to. Okay, and then I'm going to refine it even further, but this is the last time frame that I go to. So to answer your questions, what is the lowest time frame I go to look for an entry point? It's the H1. But sometimes I go to the M5 to look for lower time frame confirmations, M15 for the lower time frame confirmations. But forget about those. You don't need lower time frame confirmations, but they are a help. So the lowest time frame I go to is H1 to refine, and I see that we have ourselves a H1 support that got broken, and now it's a resistance in the future that is in the same area as this H4 open close. This is a buy, that's a support gets broken. Now, does it need to be in the exact same area? No, it doesn't need to be in the exact same area, but it helps to be roughly in the same region. Even this would be constituted as a key level, but this is the best one that I can see so far. Sometimes it doesn't even respect the best one. As I said, the markets always have an element of randomness, okay? So be prepared for that, right? And all I did then was just hit the lower time frame. So I'm not sure if I can go all the way to M5. Yeah, I can, okay. And then I would look for a certain sign on the lower time frame. I'm just gonna give you an example, right? Right here will be a breakout. Just giving you an example of what some of you guys do. Some of you guys do go to the lower time frame like M1. Okay, if that works for you, that works for you. Who am I to say whatever? I don't personally go that low, but you can go up to the M30, you could go to the M15, but the highest I'd go to is probably M30 for a confirmation. And then you take your entry based off of your own rules on the lower time frame. I'm not here to teach you guys lower time frame rules. I'm here to teach you guys how I came up with the logic behind taking a sell here. What made me come up with the logic to want to look for a sell, right? So a quick recap, guys. I know we're running out of time, but a quick recap. It's 13 minutes. I'm 3 minutes over. First thing I did was I saw that we had ourselves a weekly bearish storyline that started here. I immediately knew my rules, right? We had a weekly reject weekly. We had ourselves a daily breakout right here. So I'm like, ooh, weekly bearish. Okay, so if we have a weekly bearish storyline, where's the start? Where could be the potential end? So this is the start. The potential ends could be 1, to, if it goes this low, the storyline on the monthly is probably changed as well, but we don't get into that. The potential end for this storyline right here is 1, 2. These are the first two ends, right? The potential first two areas where price could end and not continue bearish. That's what I mean by end. Not continue bearish, 1, 2. So I knew my start, I knew my potential ends, finished. Now I need to figure out how I'm going to enter, right? So because we know about storylines, we know that we should be entering, when we have a weekly bearish storyline, we know that we should be entering off of the daily. But if there's a weekly roughly in the same area as the daily, that makes it all that more strong, okay? There wasn't a weekly here, if I'm not wrong. So it was just a daily, no problem, that's okay. So I figured out we had 3 daily zones, and now all I need to do is figure out what setup I'm comfortable taking, right? So what setup am I gonna take? Am I gonna take a touch trade like I took, where you just take the daily? You have 3 though, so be careful. You need to manage your risk well. You don't want to be setting a limit for every single daily, right? You want to manage your risk well. I am comfortable and I'm flexible doing this stuff. I've done this for multiple years. So that's why I'm so, how do you say, what's the word I was looking for? Fluent, I guess you could say. That's why I'm very fluent with how to operate this, okay? Do you want to take a touch trade like I did? So you just take the daily, because you know price should be selling off of a daily. Take the daily, you refine it to the H4, you refine it to the H1. Take a sell off of there, or look for some additional lower time frame confirmations, or add ICT kill zones, or add a trend line confirmation, whatever. Or do you want to wait for a medium to high risk entry where you're having a daily reject daily and then a H4 just gives you, like this. This is what I mean by the H4 just giving you a medium to high risk entry. Notice how the H4 doesn't go ahead and break any structure. This would be the structure that it needs to break. Notice how the H4 doesn't go and immediately break it. It just sort of sells off. It's a buy and a sell. That just gives you a resistance. That's it. This is a medium to high risk sell opportunity. Okay, why is it not low risk? Because if we want to have a low risk, we need to have a daily storyline start from this area. So we need to have a daily reject daily and a H4 breaking out the structure. Then we have a daily bearish storyline starting from here. Okay, and then we're going to take it off of the dailies and the H4s. Remember, same thing we applied for the weekly storyline fractally on the daily. So these would be the two. There are 2 entry opportunities here. One is a little bit higher risk, and then another one is a bit more medium risk right here. Daily reject daily, H4. I love this setup so much. This is my favorite, one of my favorite setups, right? Probably number 2 favorite setups, where it's just daily reject daily, there's a new H4 that spawned out of nowhere, and boom, you just take a sell off of it. Really high win rate, at least once you know what you're doing. And yeah, it's all in all just a fantastic way to trade. So that's basically it. That's how I took this trade right here. I've lost where the screenshot was, but you guys can remember how I took the trade. And yeah, thank you guys so much for watching.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from 1 lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. All right folks, there we have it. What a great breakdown there from Avez. Now, what's the best way for traders to get hold of you?
That would be Telegram.
Brilliant. Well, look, what we'll do, folks, is we'll chuck a link below this video here. Go and click it. You're also going to get that podcast that we shot whilst you're down there clicking around. Hit subscribe, like, and that notifications bell, and we'll see you in the next video.